AICP Town Hall, a high-impact news broadcast to help you navigate the most pressing issues facing the profession. Get timely and critical information, real-time interpretation, and analysis. Learn strategies, best practices, and capabilities to drive long-term success for your clients and organization. Thursdays at 3 p.m. Eastern Time.
Good afternoon and welcome to the AICPA Town Hall series. I'm Eric Auskerson, one of your hosts for today. We greatly appreciate you being with us this week. We know you all completed tax season on April 18th, and our show is about bringing you the latest information. We tried to do that throughout the filing season, and we have some important updates for you today. This is our Power Hour. One other thing I want to mention is we greatly appreciate all of the questions. Every week there's over 500 questions, so thank you for being so active with us. So now let's bring the slides up, and here's our agenda for today. We're going to kick things off with Barry Melanson talking about what's going on in Washington, D.C. and reflect a little bit on tax season. Then we're going to talk about some new opportunities for many of you in a high growth area, SOC. We're going to do our usual technical updates, and then we're going to have a Government Audit Quality Center update for you, and we will close with open forum. So what I'd like to do now is I'd like to bring up Barry Melanson, who you know is the CEO and president of the AICPA. Barry, welcome.
Thank you, Eric. It's great to be with you. And I know a lot of our members out there, are probably trying to find a place to rest or catch their breath. I don't know, we set records for attendance so frequently. This is probably going to be a record for most people tuning in, hopefully, most people tuning in off of a beach or in the mountains or doing something that they enjoy doing, still wanting to stay connected to the profession. But so many people, whether you're in tax, we can't forget about financial reporting, which is the heat of this time of the year as well. And of course, our members in business and industry as we get through a quarter here and end of the month of following a March 31 quarter, busy time for almost everybody in the profession.
Well said, Barry. And we do at times get pictures and people let us know where they are. And hopefully they are somewhere getting a little bit of relaxation. But we do have a lot to talk about today. So let's just kick things off looking at the legislative agenda for the remainder of 2022. I mean, we've been talking about this since the start of the year, and we've now broken this down into this must-do list for legislative activities and a would-like-to-have list.
Yeah, if you saw the previous slide was a release that we issued commensurate with the end of tax season, really keeping the pressure on the IRS service issues that are out there, acknowledging some things that were addressed, but still a lot to be addressed. And I think that we'll come back to tax here in a moment, but let's just get a sense for the overall legislative landscape. First off, there are not that many legislative days left. I know we're only in April, and I know you realize this is an election year, which sort of truncates a lot of the potential days. And of course, this time off that Congress takes in particularly August, and there's just not a lot of days. The calendar gets filled very quickly, and so you can't really think about it in this continuum of months, through the end of the year. The must-do list, Eric, that you talked about, really, we see them as these three elements, and some touch on us. But COVID supplement, probably narrowly focused, bipartisan support for something in this area, probably something happening relatively quickly in the April-May timeframe. A lot of things going on in the Ukraine-Russia situation, Ukraine aid. We think that there is a good opportunity, again, bipartisan, for some things to happen in that space. And we'll come back a little bit in a moment on some of the issues to be mindful of as it relates to the sanctions that are in place. And then there's a China competitiveness bill that is in conference. It's been passed by both houses, which means that they just need to compromise on some differences at this point. Those things will probably pass. in these different time frames. And to the right, you see a lot of different things that, and about 3 or 4 of these we're active on that, at least with the Democrats in control of the House and the Senate, they would say these are things they would like to have. The tyranny of the calendar, some disagreements on some of these types of issues will probably not allow much of that to pass. But it is part of the agenda, and there will be attempts to move some of these things along. And, for instance, the reconciliation bill would be where some tax activity comes out. The China competitiveness bill, potentially something on tax into that area, which we'll come back in a moment. So there's a lot of issues that are potentially in play. The left-hand side, the more significant items that are likely to pass.
Yeah, so in some way, I mean, things have narrowed. And when you just were mentioning the reconciliation tax bill, so we've outlined here 3 potential tax bills. Let's talk about each one of them a little bit and the likelihood.
Well, we've been talking about a reconciliation bill for which feels like forever now. And the vehicle reconciliation is so important because it can pass the Senate with 50 votes, or 50 votes of the Senate and the vice president breaking the tie. But of course, it's been held up by disagreements over the size and complexity of that bill. So if you talk to the Republicans in Congress, they'd say the reconciliation bill is dead. If you talk to the Democrats, they'd say, oh no, something can still pass, albeit much narrower and much more focused. If it's not passed by July 4th, it's in all likelihood, it's totally dead. But there is some movement of people working on something in a narrow fashion that you will hear on. Senator Manchin remains very key on this. And Senator Manchin is working on a bipartisan bill on some of the energy sector that if that were to move, then that might give some momentum for something that he would be willing to sign off on in a very narrow spectrum. We'll keep you posted. It's still a very small likelihood, but it's not completely dead from that standpoint. The China competitiveness issue would be something that would probably be a June timeframe. It's a pretty significant piece of legislation, but there is a tax provision in the legislation which opens the door for other tax provisions to be added. Now, we think it's a low probability that will happen, but it's, again, a possibility that could happen. And finally, we all know about tax extenders, provisions in the tax law that are set to expire. They get addressed almost always, but not 100% of the time. Oftentimes in a lame duck session, even after the first of the year, as we all know, living through the extension of some of the expiration dates. That's a possible vehicle for a child tax credit extension that's been debated in the Congress. So there's a lot of moving parts here. None of this is high probability. There are a few things like the competitiveness issue with China that probably will move forward, but expanding it to other tax things probably a low probability.
And Barry, on the last town hall, we had Michael Faulkner on. We talked about the state of the economy, the forecast. I mean, even in the past few weeks, I mean, you're continuing to have more and more people talk about the potential of a recession, the impact of inflation. I mean, that all weighs on what potentially could happen here with this additional tax.
Yeah, I mean, obviously there's a lot of moving parts. I know Fed Chairman Powell was speaking just a bit ago, and there's talk about multiple changes in interest rates and things, and I think a lot of people think it probably won't be as many as it was being talked about. Clearly, there are a lot of geopolitical issues that have an implication on where the economy might go. Supply chain, does that get better? Does that get worse? Is there an escalation in the China participation in the Russian-Ukraine environment, or is it sort of stabilized? You have parts of China completely shut down from a COVID perspective. You add to that, where does Russia, what does the Russian-Ukraine war in general go? Does it expand to other participation? All of these things it is unpredictable, I would say. I think a lot of financial analysts today are saying that they sort of expect the unpredictability to move to the next phase where it's a little bit more predictable. So maybe we're at the height of unpredictability and the height of uncertainty, is what a lot of commentators who do this for a living really are focused on. But it's a complex world, and it's something that I think being as a CPA, a trusted advisor, being conversant on that with your client is probably very valuable, because they're very unsettled in this environment as well.
Yeah, I was just going to ask you that. Right now, there are a lot of discussions happening between the firms and their clients. I know you just were with a group of small firms. What type of discussion would you recommend that they have with their clients right now based on this high level of uncertainty?
Well, yeah, in the opening comments, you talked about you thank people for questions. I did a 2-hour debrief with a group of small firm practitioners as it related to tax season and firsthand what they were experiencing. And by the way, those questions, those 500 questions, those are great feedback. We filter that into a lot of the activities that we do. So I echo Eric's point about how valuable that is. We'll get into what they were saying on taxes, but I think what they were saying as it relates to their clients, depending on what sector you're in, obviously there is a lot of discussion on what are the implications to the housing sector, which we know has a very significant fueling to our economy. There's certainly a lot of concern about anything that requires capital infusion because of the interest rate changes, and how companies can expand and the like. And I think at the bigger company level, we're in an earnings period here. That's probably having some dampening of an effect. But the negatives of inflation, if they do settle a bit, I think there's greater optimism in the second quarter, particularly from the major corporate earnings, which would probably play well in the stock market. So there's just a significant amount of uncertainty. And I'll come back to the statement I just made. I think, really when you have an ongoing relationship with clients, which we always encourage, particularly small business clients, they're probably not in an environment in which, they may be getting a little sliver in whatever industry or vertical they're in, but being that sounding board to them on these types of issues creates that confidence point. And we always talk about how we have a role as a profession to be part of the confidence part, not to be, overly optimistic by any means, but to just sort of relate to prior times, things have happened and how things work out, and give people some comfort so that business people particularly, that they can have someone that understands their business and can talk through those things with them. It's a huge intangible that the profession does, I think, in all size businesses.
Well, thanks, Barry. Let's continue on and talk a little bit about the tax season. We've got some data here from the IRS. It's highlighting 2021 compared to 2022. The top shows the total returns received and then processed. You see the growth in both. So maybe a comment on that before we get into some of the market trends.
Yeah. So, I think the top part of this, with more returns received and more returns processed, I would take away, and this is basically what I heard this morning with a group of small firm practitioners, this tax season as it related to this, set of returns, the 2021 year returns, the processing of that went pretty well. And you can see upticks on those numbers. Now, the touch onto those clients as it relates to the backlog and things from prior years and open items is still highly frustrating, highly frustrating. And so it's sort of a tale of two cities, or a tale of two stories here as it relates to that. What is surprising on this for me, as you look at the number of returns processed being up along with received, is what I'm also hearing, and it's, we'll talk about surveys and we'll see some better data, but I'm also hearing more from practitioners about extensions being up. Extensions being up because of some of the prior year activities of the IRS, a lot of issues with the uncertainties on like K2 and K3, amended 1099-Bs, which, was really bad several years ago, got a little bit better, seems to have gotten worse again this year. And so, those types of things, most people are articulating a greater degree of extensions that I'm hearing, small firms, mid-sized firms, et cetera. I'm sure there are different stories all over the place. And it's also exacerbated by the human capital elements that we're dealing with in the profession that probably, contributed to a greater number of extensions. So when I read this data, I probably would err on saying that these returns processed are not the most sophisticated returns. I think there's probably a higher incidence of extensions in that space.
Yes, and one thing, Barry, that you and I talked about this before today's town hall. Last year's deadline was later, so that's something to when you look at these stats here. So going on,
and I'll give you another thing. I'm hearing, and it ties exactly to what you're saying. The flow of information from client to preparer is also impacted by things in the market, in things that, like, for instance, business entrepreneurs are dealing with, higher inflation, how they deal with pricing, the human capital elements that are way beyond just our profession. And so those things actually, it's not very visible, but they impact information flow, which impacts the ability to get a return finished.
Well, let's look at the lower half here. And this, this is something that doesn't surprise me, where you see the growth with tax professionals being higher than with self-prepared or do-it-yourself. And this is a trend that we've seen over the past many years, where the outsourcing of the tax service, that is a fundamental value prop. One is for the trusted advisor service that the firms provide, but other is just that people are busy. And yes, there's software out there that people can do their returns, but they want to leverage tax professionals. So this is the total tax professional market. The CPA firm market is a subset of this. But when you look at projections, it is almost anticipated that it will always stay above 50% with tax professionals, just due to the busyness of people's lives and the desire to outsource, but also the desire to get expert advice. Barry?
I think that's absolutely right. We've been saying that for many years. There's clearly technology implications on certain types of returns and certain aspects of where a person is in their sort of work career and family career and the priorities that they have. But the reality is that we do have a very complex system. I think the other message here is, last town hall when we had Faulkner, we talked about the public-private partnership that existed in PPP, certainly the first round of PPP. But you've heard me say, those of you who are regulars on this town hall, we have essentially a voluntary compliance tax system. That's how our system really works, and it really is delivered in a form of public-private partnership, and preparers are part of that private component that really makes the system work. And so when we talk about on the Hill the need for the IRS, to have functions that meet the needs of preparers, so that they can be more efficient in doing this greater than 50% of the returns, it is really part of that public-private partnership. Now, they get pushback on that because some members of Congress and others would say, well, people paying doing the work themselves ought to get services as well. Well, of course that's the case, but you can make the system more efficient by preparers, and these are not just CPA preparers, but all preparers. You can make the system more efficient if the preparers have better access to information, better access to the IRS, and are able to make the system work better. And this data points to that. That's what the American public expects in a lot of ways as part of its commitment to a voluntary tax system, which of course, fuels the revenue of our country.
Yeah, and in a future town hall, I think we will review the total tax receipts, which, just from the corporate tax as well as the personal income tax, are really at all-time highs. So that is just this public-private partnership is working. There's frustrations. We've talked about those frustrations, and we've communicated those frustrations to the leaders of Congress rather effectively. And I want to call out the town hall here because they've played a role, Barry. They've played a role in 2021 and 2022, and I know you're really proud of the response in the bipartisan, support that we have received.
Yeah, and this sort of goes unsaid, and thank you for calling it out, because the response of people on this town hall has been fantastic on it, and we feel it on Capitol Hill as we try to get this done. So thank you. I would echo that. But I think as part of this profession, understanding the impact here is very, very powerful. So when we look at, there were different types of letters issued here. On just one of these letters, the Sanchez letter, there were, you can see the numbers here, over 200 people signing it, members of Congress. And that's over 40% of the House, approaching 50% of the House, basically. That does not happen in other profession and trade groups on the issues of the day. And that's a tribute to the men and women in our profession. And it's also a tribute to our team, making the cogent points that people can get behind in Congress. And it's when you add up all of these different letters, more than 60% of the House signed off on at least one of those letters. And the key component of that is, just by the math, that's bipartisan. We work really, really, really hard when we address issues to make them as bipartisan as possible. And where this will pay dividends, specifically pay dividends, if in fact the House flips, which most political pundits are predicting that the House will flip in November, the notion that we worked as hard with the minority, the Republicans in this case, to have them part of addressing the issues will be very important if they become the majority. And likewise, we will have worked really hard with the majority in this year, the Democrats, and bring them along in support. There are very few things in Congress today that are bipartisan, and we work really, really hard on the bulk of our issues to be as bipartisan as possible. And I can tell you, I was having a conversation this week about someone who's running for the U.S. Senate in a state and has formerly been a member of Congress. And that person spoke to me about being on different issues and being in a small group, but making it bipartisan. And I think that is something that our profession should be very proud of.
Yeah, and I think this is just something we're going to continue. The advocacy updates on the town halls are very important. These efforts, it's starting in what we did in 2020 with the PPP communication, to 2021, and now continuing on into 2022. Just want to highlight here a good resource. Barry talked about the Russian-Ukraine war and the situation there. There's a site here that's been put together in the AICPA properties that really provide what you need to know about the business impact. So please leverage that.
So Let me just add one point to that, if you don't mind, Eric. First off, we're keeping the heat on all of these IRS issues. We've been communicating. Nothing has changed from that. But we can't lose sight of some of the other elements that are out there. And there are some potential tax issues here. And before you dismiss this as a small firm, or if you work for a mid-sized business, the rules of sanctions that have come about have predominantly come about to date through executive orders. They are very either non-defined or loosely defined, and they're subject to interpretation. And there are a lot of industries, even small business participants in certain industries, that have impact here. The executive orders clearly prevent something in a supply chain that's dealing with country X, and then that country X is going to Russia. It prevents those types of things or prohibits those types of things. It is, again, a topic that for your business clients, or if you work in business and industry, to have the conversation. There is not sort of a one-pager that can define all of this. It's complicated. It's sort of case by case. but don't dismiss it, because these are the most, I would say, the most impactful, but they're the most stringent economic sanctions in the history of our country. And it's very important to be aware that there are way down in the supply chain some impact. The other thing that I would say is that while it's been done mostly by executive order, as Congress is coming back, as Congress is feeling some, feedback in their districts, I think there will be a pickup in Congress's desire to legislate certain things. And there are issues related to tax, even basic tax compliance, and also financial reporting, where there might be transactions involved that come into play when legislation starts working. So we will be on top of it, but we're raising the profile just to be thinking of it.
Yeah, we'll absolutely stay current on what's happening and update these resources and talk about it more in town hall as needed. So now I'd like to bring up Lisa Simpson, who you all well know, one of the leaders of the AICPA, leads the firm services area. So welcome, Lisa. And what we do here in the town hall is talk about capabilities and strategies, and that's what we're going to do here on SOC.
Thanks, Eric. Good to be back. Hope you all enjoyed the end of tax season, and for our auditors in the crowd, because I know we do have auditors in the room, this is a topic you'll probably be familiar with. What we wanted to do throughout the course of the rest of the year is bring opportunities that we see in the marketplace to your awareness. I want to be clear up front. Not everyone's going to want to take each of these opportunities. They're not all going to be within your skill set immediately. They might require some investment, but Eric, Barry, and I are all hearing from firms that SOC reporting is a growing business line within firms. So we just want to bring it to your awareness and throw out some resources for you to consider. So the one we want to talk about today is SOC. What is SOC reporting? We've got some basic information here, and we're not going to go into the technical details, just trying to bring it up and give you some of the resources that we have. You have lots of different types of SOC reporting, and there are technology capabilities out there to help with these, but this is an opportunity to explore a new service line. So SOC is basically about helping your clients assess different types of third-party risk. That's the basics of it. It seems like perfectly in line with auditor capabilities and CPA capabilities, because we're good at measuring performance. We're good at assessing internal controls and meeting professional codes of conduct. If you were to go into SOC, if you haven't built out any SOC reporting capabilities yet, you're going to need to invest. You're going to need some specialized IT skills that you get either through education, or you hire someone in with those skill sets. You partner with another firm that offers those. But basically, we feel like CPAs are perfectly positioned to succeed in this space. From my perspective, when I'm talking with firms about some of their challenges in bringing in talent, we know that younger people are looking for entrepreneurial opportunities. So developing out a service line within the firm might be a good way to get them interested in either sticking with the firm if they've been with you for a while but are looking for something new, or again, looking to hire in a certain skill set. Barry and Eric, I know you guys talk to firms all the time about the growth in this market.
Yes, Lisa. So I'll add a couple of comments and let Barry jump in. I mean, this we all remember. Many of us remember when it was SAS 70, and this has evolved into something that is so important for companies today. This is around the SOC 2 standard and the SOC 2 service. Basically, any of these new technology cloud companies, it's a must-have. It's a must-have. It's the gold standard for having a SOC 2 report, providing that to your users. And we've got numbers that state there's potentially like 3 million SOC 2 audits occurring globally. I mean, in many cases, businesses, their first interaction with a firm could be in getting a SOC 2, because these early stage companies, even as they're just getting their revenue going, they go out and they get a SOC 2. So it's it's a way to establish a relationship with a startup. And we also know there's firm, and this is a specialty area. There's a couple of firms, and it's a firm in the top 100 that has over $100 million a year just off of this service line. So I think this is excellent that we're talking about this more broadly. And I know we've got some training that we're offering. Barry?
Yeah, this is really where, you know, you think about assurance and audit. This is where assurance is moving. Audit is sort of sits under the broader umbrella of assurance, and our profession is in effect in the trust business. And this is about adding trust to a business environment or a control. Instead of attesting to a number on a financial statement, or a set of numbers is probably better said, then this is about the controls that produce an outcome or a reliability concept. And it's very important. This is where it's heading. We have projects to reimagine the audit. It's called Dynamic Audit Solution, and it's about changing methodology and approach. So the audit is evolving very dramatically, and I think we'll have greater opportunities for different size firms as well there. But this is an area that really is demonstrating of how the market is turning to someone in the profession. In this case, it's someone in the market. In this case, it's us, because we're trusted to make things work, to rely on controls and activities. Multiple millions, 3+ million, as Eric talked about. And you know, a decade ago, there was no such thing as SOC, really. And so this is a growth area for different size firms. Our team has done a good job of developing it and bringing it to the market and expanding it in different areas, including supply chain, which is a big needed area today.
Lisa, a couple of questions here. I don't know if you're looking at the questions, and so I just want to bring them to us. One is this just a large firm opportunity? I think both you and I know there are small firms providing the SOC 2 service. There are some special competencies you need. So, and I know some small firms that have become, you know, quite large by focusing on this. And then the size of company. I know companies that have 10 employees that are getting a SOC 2 audit. So this is not, the service is absolutely provided to small companies, and then, you know, large companies utilize the SOC service as well. So Lisa, maybe you can expand further on just, you know, the large firm versus small firm, and how does a small firm get going? Maybe a little bit more on that.
Yeah, again, it's not an automatic open your door day one and be an expert in SOC, but I do think that there's an opportunity to create a niche in a small firm environment. Again, it's an investment, but if you're looking for a way to shift your service line into something else that, again, opens up opportunities and high growth potential, then I think investing in some of this is a good thing to consider. And on the next slide, we talk about how to start getting into thinking about this opportunity. So again, just exploring. We do have a brand new SOC and third-party risk management conference. It's online. We've got some of the experts from the profession who are deep into offering these services that'll be giving you their expert opinions. We've got 2 tracks, which is what I was really excited about, is that you've got not just the experience track, but we've created a track within the conference for folks who are interested in exploring this service line. The team at the AICPA that's working on SOC resources is creating a how to build a SOC practice toolkit that we'll have available for you a little bit later in the year. And then we have tons of resources on how to start building out some of those capabilities. There are self-studies, there's a SOC school, there's certificate programs. So all kinds of resources and training within the SOC space that can help you start building out those capabilities.
So more to come, and we will talk about this more in future town halls. And this category is evolving. There's a lot of technology services coming in, both on the company side to help with the readiness for a SOC 2 audit, as well as on the firm side. Barry, I don't know if we're going to move on to our next topic. Is there any concluding?
Yeah, it's an example of the profession's value in a broader set than the traditional, broader set of areas than the traditional auditing and tax.
Okay, thanks, Barry and Lisa. I'll let you. Well, you and I are going to stay on together for a little bit for the technical updates before we have the government audit quality update. So, Lisa.
Yeah. So just a couple of quick points about K2, K3, which is the new forms that the IRS implemented this year to report on pass-through entities items of international significance. We've talked a lot in previous town halls about some of the chaos and confusion around these 19 or 20-page forms, but wanted to bring to your attention that the IRS released an additional 8 FAQs, bringing our total up to 26 FAQs on this reporting requirement. The ones that were released most recently clarified that if an item on the K2, K3 form didn't apply, then you didn't have to complete it. But there are a lot of other special circumstances that they dig into in those FAQs. So we do have an entire library that you can refer to for the continuing confusion. Also, I thought this one was interesting. If you remember back to the Tax Cuts and Jobs Act, there was a cap on state and local tax placed of $10,000, and that's in effect from 2018 to 2025. 4 states sued to say that that was an unconstitutional law that was written in. And basically this week, the Supreme Court declined to review. So the SALT cap stands. I saw a question earlier about whether or not there was talk of increasing the SALT cap. I'm not hearing any movement around that. But again, it does expire currently at the end of 2025. Lots of comments in the Q&A about tax season deadlines. Here's your chance to get your voice heard. Fill out this super short 8-question survey from the tax team on how was your tax season. Then,
at least on that, we may have not. I'm not sure if the link is there. We will get that to them in the follow-up newsletter if that's the case, because it looks like for some reason the link dropped off of this slide.
It's magic. All right, so PPP, and I apologize because I know y'all really wanted to talk about the due dates in that survey, so we'll make sure you get the link. I've got some interesting updates on PPP. Right now, it looks like we're at about 90% forgiveness of both PPP1 and PPP2, but there are some stragglers and there are some interesting situations that you or your clients may still be confronting. So I wanted to bring some interesting notes that the SBA is giving to lenders. I have not seen any of these come through as procedural notices. They're coming through the loan platform. So I pulled out a few that I thought might be relevant. And again, not applicable to all your clients, hopefully, but just good for you to know. So the first one, let's say that you've got a borrower who has defaulted on the terms of the loan. The SBA is saying, yes, we know that we guaranteed that loan to you, lender, but lender, we expect that if you have the right to offset any funds or to basically go in and withdraw money from a borrower, then we expect you to do that first before you submit for the guarantee. So an interesting twist that lenders are still kind of grappling with.
Not a surprise though, Lisa. I wouldn't say I'm surprised. I mean, then Treasury is going to also do their best to collect the funds. So I mean, correct. No one should be surprised. You don't pay. You don't get forgiven. You don't pay back the money. There's going to be attempts made to collect that money.
That is absolutely correct. Yeah. We talked a couple months ago about a new procedural notice for situations where a borrower did not get full forgiveness granted by the lender. So there was supposed to be a process for the borrower to say, I want a manual review by the SBA. And they released this notice January 27th, but they still haven't developed the actual process for the lender to tell the SBA borrower wants a review. So they're still working on that. I'll let y'all know when we hear that that is up. But the important part is, as long as the lender gets the request from the borrower within 30 days, then they'll still be able to get that manual review once the SBA opens that process within the loan portal. Can lenders extend the maturity on PPP loans beyond 5 years? If you remember, way back in the beginning, loans were for 2 years, then they were extended to 5 years, and borrowers and lenders were encouraged to work together to get them extended, get those 2 years extended to 5. Well, now we're coming up on maturities of those 2 years, and we're getting questions about, can it go beyond even 5 years? So the SBA came out and basically said that you can extend up to 10 years, which is good news if a borrower didn't get full forgiveness, as long as the extension is granted before the SBA guarantee expires. This is an interesting one. I had a CPA reach out to me because they had heard from someone who the CFO just simply had not filed for forgiveness on their first or second draw loans, had ignored all the requests from the lender, hadn't made any loan payments. So the lender turned the loans over to the SBA and said, you know, I'm calling in your guarantee. Now the client has figured out that something went amiss and is saying, are we on the hook, or can we still apply for forgiveness even though the lender has filed for the guarantee from the SBA? And the answer is yes, but not yet. They're still working on that process. So again, that's probably not a situation you're going to run into every day, but I think it's important for you to know that that opportunity has not yet been closed off.
Well, thank you. And that's, Lisa, just a final concluding comment here. You have 10% of the applications still outstanding. So as the numbers get smaller and smaller, you're going to get, some of these clearly applications that have not been forgiven and have some of these complexities that you just discussed. So Lisa, with this, I'll let you move us to the next section.
Thank you. I'm going to bring up Mary Folster, who's going to give us an update on federal funds provided to for-profits, not-for-profits, and governmental. Hi, Mary. Thank you for joining us today. We're glad that you could come back and give us some of these good, interesting updates.
Thanks, Lisa. I always look forward to it.
So we're going to start with, well, we're just going to talk about 3 main programs that are highlighted on the next slide. And if we can move forward, we'll look at the really long acronym about coronavirus relief funding for state and local governments. Eric, if we can move to the next slide, please. So you've got coronavirus fiscal recovery fund, the provider relief fund, and one of our perennial favorites, the Shuttered venue operations grant. So we've got, oh, go ahead, Mary.
I was just going to say, before we leave this slide, I just kind of want to ask everyone to kind of wrap your head around the dollars on this slide. When we first looked at the first draft of this slide, someone had changed it to millions, and I'm like, no, it's billions. So just the first 2 alone are almost 600 billion. And when you add up all the rest of these, we are in the 1 trillion area of new federal funding that's becoming subject to audits by practitioners. So the federal government's relying significantly on these audits. So I just can't stress enough how important they are. But yes, today I'm going to focus on the 3 that are circled.
All right, so let's jump into the first one, which is the biggest one. And as Mary pointed out, 350 billion. Mary, I know you've been keeping your eye on this because of the number of entities that have been have received this funding and could be subject to potential single audits for the first time.
Yes. This program is historic in its size and also the number of recipients. We've heard upwards to 39,000 recipients. I don't like to put an exact number because I'm not sure anyone has the exact number. But what became apparent very quickly was that there is a significant number of those recipients that have never had to undergo a single audit before, or perhaps even an audit. They're small enough. So it became apparent quickly that there was just a lot of concerns expressed by some of the states that were overseeing local governments within their states, from the profession in terms of how are we going to find enough auditors that are qualified to do all of these engagements. So basically this program, which is very unusual from that perspective, they've just issued a final rule back in January that kicks in for April 1st, 2022. And that clarified a lot of different things about this program. What that means is that a lot of people are waiting for that final rule to actually make their expenditures. And now we're probably going to see a lot of the expenditures running through. So 2022 is really going to be the first time for many that this program is going to be audited. And it does go to states, locals, and something that's referred to as non-entitlement units of local government. They're very small, populations less than 50,000. So it's an incredible program. If we could go on to the next slide. They have put out guidance in December, the first compliance supplement section for auditors to use. It was issued in December. But since then, we've been in active conversations with Treasury and OMB, the National Associations of State Auditors, Comptrollers, and Treasurers, about the concerns of the number of small recipients and whether there was some burden reduction that could be provided to them in terms of the level of assurance that needs to be provided on the funding. So just in the last couple weeks here, OMB issued a Federal Register notice that technically updated the section that was originally issued, and it now introduces this alternative compliance examination for certain recipients. And I've given you the link there for the where you can find the update, as well as a GAQC alert that explains more about the Federal Register notice.
And then on the next slide, we've got some of the what looks like good news and some of the good news from the efforts that your team's been doing. But is this something that any practitioner can jump into, or are there special trainings that they're going to need?
Well, the engagement is going to be done under the AICPA's attestation standards. It's going to be an examination, so it will result in an opinion. And it's also going to be done under government auditing standards. So anyone that takes on one of these engagements, even though it's not a full-blown single audit, so the practitioner doesn't need to know everything about the uniform guidance, which is the reg that we follow, you do need to be competent to do an attest and to meet the requirements of government auditing standards. We still believe, though, that because this engagement is so narrowly scoped, it's nowhere near as broad as a single audit. It's going to focus on two particular compliance areas that relate to allowability of funding and whether the expenditures, for example, were made for ineligible purposes. But it's nowhere near as broad. So the good news is that to take on one of these, you don't have to have the full experience needed for a single audit, but you do have to make sure you understand these two sets of standards on the slide.
Independence still comes into play, is that right? Big
time for government auditing standards, independence, CPE requirements that are in there. They differ or add on to the AICPA's attest standards, and so you need to be familiar with those.
Okay, great clarification there. Thank you. And then on the next one, you've got some information about who's eligible for this reduced
scope. So recipients that expend $750,000 or more during the fiscal year that meet both of the criteria on this slide take advantage of this alternative. The first is that their allocation received directly from Treasury, and that's critical, or received as a non-entitlement unit of local government. And what that means is they actually got the payment from the state, but they are considered still a direct recipient of Treasury. As long as that allocation was below the $10 million revenue loss standard that they have, and any other federal expenditures not from that program are less than $750,000 during the year, they can take advantage of it. So what we know about these small governments is they may have a real small grant from HHS, for example. They may have another small grant from the Department of Transportation. Neither of those add up to $750,000, but they got this disbursement from Treasury for this program, CSL FRF, and it threw them over the $750,000. In that case, the recipients can go ahead and do this alternative. I will point out that if anyone gets this funding as a subrecipient, a true subrecipient, like a not-for-profit that might get it from the state or a local government, they would not be able to take advantage of this, this alternative. They would have to go the single audit route.
Okay, great.
We do expect at least 10,000. I've heard upward to 20,000 may be able to take advantage of this.
All right. So then I think we're going to move to the Provider Relief Fund, which is another area where you've been doing some advocacy work around the some of the tricky implications of the program.
Yes, and for a long time now, we've been speaking to the Department of Health and Human Services about one particular compliance requirement that they were asking us to test in our single audits of this program. And it relates to out-of-network patient out-of-pocket expenses. It's pretty technical, so I don't want to get into the nuances here. But the good news is that this technical update that OMB just issued actually removes that requirement to test that requirement from the compliance supplement. So we've known it's been problematic for a while. Basically, HHS has agreed that they don't really need this information to oversee the program, and so they've removed it. So that's good news. And the rest of this slide really just gives the viewers other resources that we put out over the last couple months on the Provider Relief Fund program. So they are available and open to the public.
I know we've got some questions in the Q&A about what's going on with Shuttered Venue Operators Grant. So let's scoot on over to that one. What's the latest on whether or not for-profit entities who receive those grants are going to be subject to single audits? Where are we now?
So we've been having very active discussions with the SBA SVOG team on the for-profit implications. They've been working so hard to stand the program up that now they're finally getting around to kind of the closing out and spending and auditing of this program. So right now, what their rules say is that the entity can submit either a financial statement audit or a single audit to the extent they have 750 or more in their fiscal year of expenditures. But we have been having active discussions with SBA on another third option that I can't get into the details yet, but I do feel pretty confident that sometime in the near term, they should be putting out guidance that would explain more about that. So we've also been talking to them about the time frame for these engagements being complete. Right now, it's 9 months after the end of their fiscal year. And we're already here in April, almost May, and a lot of entities have been waiting for more guidance from Treasury. So I'm sorry, from SBA. So I guess my point here is stay tuned. Maybe by the next town hall or a few from now, we'll be able to give you more details.
Great. Thank you for that update, Mary, and thank you for the efforts of your team and you in the advocacy space to have some of these changes made.
Great.
Well, Lisa, we can, and Mary, you stay on for open forum. So now we're in open forum. Lisa, I know we've got a lot of questions coming in, and I think you've got an ERC question.
Yeah, we're getting ERC questions about whether or not there's any potential change in allowing a company to wait until they get the refund to deduct the expenses. We're not hearing any movement on that. What we are seeing is bipartisan support for penalty relief in cases where this ERC delay, because we know that the IRS has acknowledged delays in getting out these ERC refunds, there's bipartisan support for broad penalty relief in that area.
Okay, thank you. Barry, anything you want to add to ERC?
Not to ERC, but I do want to just make a comment on that compliance report that Mary focused on. We've been speaking about the Single Audit Act on the quality issue and the capacity, really the capacity issue, and the importance to be aware of that emerging issue really since the inception of COVID, or the legislative assistance programs. And our team, I want to give credit to our team, but I also want to give credit to the key government agencies, because, you know, a lot of times we sit around and we talk about, you know, bureaucracy or things being, you know, all rules-based, et cetera. And our team did a great job of bringing the issue forward, making some suggestions on how to use the different types of reporting to get to the compliance activities that the government wanted to to focus on where they saw the risk. And frankly, the government agencies agreed. And I think that's a win-win. And frankly, again, as I mentioned before, sometimes things happen and you don't see them often. And we tend to be critical where a lot of things don't happen. In this case, it's a great story. I think the profession can meet these demands. and can meet it without the same, level of compliance aspect of the single audit. So kudos to our team, but also kudos to the federal agencies.
Just a couple comments out there. We've got a lot of attendees today. I understand that there's been a couple of maybe browser issues, just people needing to refresh. So that's one thing, you can push F5 or just refresh your browser, and that sometimes gets the player going again. Secondly, just related to CPE, downloading the certificate, I know there's some questions on that. We will provide you instructions in the follow-up newsletter that we send out. A question related to the SOC discussion in independence. So Lisa Barry, questions coming in about independence and providing the SOC 1, SOC 2 service.
I'll give you a high level. Lisa can give you the details, but SOC engagements are independent engagements. And the question I saw pop up, talked about, does it affect your independence from an audit perspective? So if you're going to be independent on the audit, you're going to be independent on the SOC report is going to be the general answer to that question. And it is an independent, the independence rules apply to those services.
Yeah. And we can follow up on that in the town hall newsletter. I did get a note that the tax season survey got pushed out to everybody. So hopefully you now have the link that you need for our tax friends to answer those 8 questions about how tax season went for you. And we do appreciate your feedback on that.
So Lisa, questions that you are seeing out there?
I saw some questions earlier about whether there was any movement to replenish the restaurant revitalization fund. Lauren, who's been on the town hall before, sent a link to a story simply titled, "It Faces Strong Headwinds in the Senate." So I'd say right now the outlook does not look good. But as we've said on this town hall for the last 2 years, things can change quickly. But that's what we're seeing right now.
Here's a question for you, Mary, related to the Shuttered venue grant on what the fiscal year. Define the fiscal year.
For most for-profit entities, it would be I'm guessing 12/31 year ends it would be the entity's fiscal year. So in the for-profit world, it's usually 12/31. In the government world, it can be 6/30, 9/30, 3/30. So, but for for-profits, which I'm guessing most here are interested in, usually it's calendar year.
And the $750,000 expenditure limit is based on the fiscal year of the entity, not the calendar year.
It's on the fiscal year. Yeah. Yes, it is.
Okay. Well, I think I just want Barry and Lisa let you know a lot of good comments coming in, Barry, from your question on where people are, where they're watching from today, and Lisa, comments back to you as well. So we appreciate we had a huge attendance, almost between almost 7,000, between 6,000 and 7,000 on today's town hall. So thank you for being with us, and Mary, thank you for your update. A lot of important information there. So we've got a couple of other slides here we want to share with you. One, Lisa, on a Pcbs survey.
So I know I was pushing the tax survey. That one's 8 questions. This is our PCPS top issue survey. This is a broader look at what are your challenges related to firm practice management. And you'll remember we talked about these last year. It's not a head scratcher. It's a, yes, this was a really big hurdle for me, or no, I'm okay with this one right now. So about 10 minutes or so, those insights are really important to us. We'll dig into the results by firm size at a future town hall. We identify what gaps we have in resources, and we'll help map you to the resources that we do have. So we'd appreciate your input.
Thank you. So here's our in summary slide. Welcome you leveraging these slides with your clients internally at your companies. And what we're also doing with the town hall is we are slicing up these 1-hour sessions into segments. So you'll see more of that, where in last town hall we did a segment on ESG, and we've got a standalone 8-minute portion that you can leverage. So what we're continuing to leverage, think about how we can repurpose these town halls for you. Here are the full town halls on our AICPA TV site. You can watch them, share them with others. One thing that we will be talking about in a future town hall is the explosion occurring in the client accounting services area. Lots of capabilities. One new capability that we're talking about is spend management in these smart cards. So here's a webinar on that. And we are going to talk more about client accounting services. Actually, client accounting services was the #1 growth area in the recent top 100 report put out by Accounting Today. It moved up 9 spots to be the highest growth niche area in a firm. So here's the upcoming episodes. The next one's May 5th, May 19th. One question we got today was you'd like to see the full year calendar so you can get it on your calendar. We appreciate that, and we will continue to do our best to make this a seamless registration process. One thing about today, I know the polls did not work as planned, so you will be receiving a follow-up note in that newsletter on how you can get your CPE credit. Barry, thanks for being with us. You'll be back with us on May 19th. I'm going to let you close out.
Well, I think really just congratulations to the profession again, getting through these tough, difficult times, and just know that the issues of the backlog and the service from the IRS remains front and center for our DC team and our tax team. And you raising the issues in questions and other feedback and answering the survey is critically important to us continuing to make progress in this area. We did achieve some progress. There's more to do, and I think that'd be my summary comment.
Thank you. That's all for today.
Thank you for your participation. You can now subscribe to the AICPA Town Hall series on your favorite podcast platform, as well as watch archives on YouTube and AICPA TV. Tune in for live broadcasts Thursdays at 3 p.m. Eastern Time.